Moving countries can be one of the most exciting and most challenging things you'll ever do. And we're here to take one big worry off your plate: your taxes. At Expat Taxes, we understand the complexities of Irish tax from your perspective as an expat and tailor our advice to your needs. With decades of expertise, our team at Expat Taxes will help you navigate tax residency, cross-border taxation, reliefs and returns, and will work with your country's tax advisor to make sure your taxes are sorted. Whether you're an individual or a corporation coming from Australia, the United States, the UK, or anywhere in the world, we want to help you. So visit us at expattaxes.ie to book a consultation today, and let's make moving to Ireland easier together.
Welcome to Tax Bites for Expats, the top tax tips you want to know as an expat. The podcast is here to help answer the common queries and concerns expats have when moving to or from Ireland. Complex taxes explained simply. We'll focus on the Irish and international tax issues to be aware of to ensure you save time, money, and stress.
Hi everyone. This episode is part one of Stephanie Wickham's chat with Daniel Howse, a global mobility tax expert and partner at Tax Advisory Partnership in England. In this post-Brexit, post-lockdown world, the idea of remote working across the planet is normal for companies and employees alike, and a great benefit for expats. What's often missed is cross-border taxation and planning for incentives that make it beneficial for those employees and companies. This is where Dan comes in. In this episode, Dan shares his expertise from a UK-based perspective on the importance of social insurance and managing your contributions, cross-border tax incentives, and what remote working looks like for those who want to work from abroad. Dan gives us a good reason not just to make the leap to work overseas, and to take an informed approach to save the hassle in the long run. And stay subscribed to Tax Bites for Expats for part 2 next time, where Dan covers the UK non-domicile legislation changes, how it impacts his clients, and the changes to tax rules that you need to know if you're going to or coming from the UK as an expat.
Hi everyone, welcome to this episode of Tax Bites for Expats. Today's guest is Dan, a chartered tax advisor with over 16 years of experience at a top 6 accountancy firm. Dan's a true expert in global mobility tax, advising a wide range of clients, from multinational giants and ambitious SMEs expanding overseas, to individuals who are relocating for work or navigating those complex cross-border lifestyles and the tax issues that come with it. He's known for his down-to-earth, pragmatic advice and his commitment to truly understanding each client's unique needs. So whether it's helping businesses manage international payroll, advising on tax residence and social security, or guiding individuals through the challenges of remote working and international assignments, Dan has seen it all. He works in the UK tax system and he's seen everything from relocation planning and tax equalisation to navigating double tax treaties and advising on international share schemes. Outside of tax, his passions include his family, cheering on Crystal Palace as a long-time season ticket holder, collecting records and attending live gigs. He's also an almost retired amateur footballer, though the boots might still come out now and then. Dan, thank you very much for joining us. I hope that intro did you justice and I got all the details right.
Yeah, thank you.
Long-time Crystal Palace fan, season ticket holder.
Yes, yeah. Well, up until 2 weeks ago, very long-suffering Crystal Palace fan as well. But we finally won something, which I didn't think was ever going to happen in my lifetime. And waited nearly 40 years for it. So, yeah.
Oh, I don't follow soccer, but I'm very happy to hear that they won.
Yeah, thank very much. Yeah, it was a very long, emotional, and quite a few drinks were imbibed celebrating afterwards.
Of course, you've got to celebrate the wins. But tax is your day job.
It is, yes.
Yeah, tell us, expand perhaps a little bit on the intro and in terms of your background and your career in UK tax. It's you've spanned a lot of areas. I'm sure you've worked with lots of clients. Where are you currently at career-wise?
Yeah, sure. So I currently at Tax Advisory Partnership. So we're a sort of relatively smallish boutique tax firm. We're based in London with a team up in Leeds as well. So even though we're quite small, we do cover pretty much all the taxes. So I joined sort of 6 months ago, specialising in global mobility tax. We started off life as a kind of sort of an international private client firm, really, specialising in kind of international high net worth individuals. Expanded into doing sort of US taxes because there's a lot of US people living in kind of London and in the UK. Then we got a corporate tax team based up in Leeds, and we also do VAT as well. But my background is, and kind of the reason I joined is that I kind of sort of sit in between the two of corporate and individuals. So my clients are corporates who tend to be established multinationals where they have kind of at least one entity kind of outside the UK. But it's also, and especially sort of post-pandemic, it can be just a UK company with an individual who's on a UK contract but kind of working overseas, and that creates its own issues. But at a very high level, it's sort of cross-border employment taxes and helping the employers first and foremost, making sure that they're being compliant, managing their risk, and if things are kind of more formal, ensuring that they're making any kind of sensible cost savings they can do with how they structure things. But yeah, it's been a very kind of interesting time in what we do, especially kind of post COVID, because
Mm.
it's completely shifted the mobility landscape, really.
Yeah, it has. We've seen that too. So people are much more open to maybe living in Ireland and
Mm.
flying to London or to the UK for 2 to 3 days a week to do their work and work rest of the time remotely. Have you seen that kind of shift into cross-border remote work?
Yeah, really have. It's I mean, it was happening pre-COVID, so it's not a completely new thing. But I think a lot of businesses sort of realised, like, because they sort of pretty much had to shut down and go fully remote pretty much overnight, and you had a lot of people that were like, kind of, hey, I can do my job equally well sat here. Like, once things go back to normal, can I carry on doing this? And I mean, now that we're, what, 5 years out of it? Well, 5 years since the start of it anyway, it's kind of sort of settling down into a, I don't like the phrase new normal, but it kind of is a new normal.
Mm.
You're sort of seeing employees asking for it a lot more because it sort
Hmm.
of suits their personal circumstances. They can save time and money on the commute. They can spend more time with their families. So they're demanding it more. And employers, even if they don't want to, they're kind of seeing it as a useful kind of retention and recruitment tool to allow that flexibility. But it's kind of relatively straightforward when you're doing it in the same country that you're employed in and you're not traveling anywhere. But when you start opening up the kind of cross-border elements, a lot of people naively, or both the employees and the employers, sort of think this is straightforward. I can still do my job. It doesn't matter that I'm in Ireland, my
Yeah.
employer's in the UK, and it can open up a can of worms. And even now, still dealing with clients that have employees coming out of the woodwork being, oh, by the way, I've been working in Spain for the last 2 years. And yeah, it can cause not so much for the individual, but for the employer especially. And yeah, social security, which I think we're going to come on to, is the big thing that can kind of bite a few employers that, yeah, with issues that they didn't realize they had.
Let's talk about that actually, because I think it's something that comes up frequently. But sometimes I don't know whether or not it comes up often enough when we have conversations with clients, because we'll frequently talk to exactly the category of person that you've just mentioned. So somebody who has either initiated or a request with their employer or taken a job in a different jurisdiction. So in our case, it would be they're either working in Ireland for a foreign employer or they're working abroad for an Irish employer. And, people often ask, oh, where do I pay my taxes?
Mm.
Perhaps less frequently they ask, where should I pay my social insurance?
Yeah, same.
So from the landscape shifted when the UK, and in the context of Ireland and the UK, this is what we'll focus on, but the landscape shifted when the UK left the European Union. Talk us through what that meant to some of the kind of norms that we had when Ireland and the UK were both in the EU.
Yeah, sure. Well, fortunately for us in the UK, the UK decided to be sort of relatively sensible, and we actually sort of opted back into the old rules that we had before when we were in the EU and covered the EEA as well. And fortunately, I mean, we discussed this before we came on air, that I think the UK government had their hand forced because you have so many cross-border workers between the UK and Ireland that they pretty much had to do something overnight. So fortunately, we did pretty much. I think it's a memorandum of understanding, like the protocol that we signed, effectively adopted the old rules before. So it meant that practically nothing changed. And I don't think. I mean, I can't believe it's been nearly 10 years since Brexit already. And we're kind of
Really?
still talking. I think, was it 2016, the vote? Was it? Or the other?
Wow. Yeah, you're right. It was 2016. Crazy.
Yeah, I was in
Wow.
a tent at Glastonbury when I found out this news that we had. So yeah, it's kind of sort of etched in my memory. It's a bit of a strange place to be to find out that news. But yeah, then sort of coming back into reality from that and find out, okay, what does this actually mean?
Yeah, the impacts were massive potentially.
Yeah, well, fortunately for Social Security, for kind of us as advisors, it meant that we didn't, because nothing in practice really changed. And I don't think I've really come across one scenario in practice that has fundamentally changed from the pre-Brexit rules.
So to kind of, and not to pick your brains, I suppose, too much on it, but the way I often would think of social insurances is generally you pay in the location where you reside, and then there's rules and scenarios where you don't. So to kind of take an example of somebody who's in a cross-border working situation, what would you generally ask a client or talk to them about to work out where their social insurances should in fact be paid?
So yeah, so there's two important things. That pay where you work is probably the fundamental concept, but it can be overridden, and this is where in the cross border work or the remote work situation, it can be quite complex. Because if you sort of take a step back and you ask yourself, kind of, what are social contributions for? And they essentially kind of pay for your state benefit. So the state pension's the big one, and then state healthcare, job seekers allowance, and kind of any other government provided benefits. And you essentially want an individual to be kind of paying them where they might draw down on those benefits, which most times will make sense, will be the country where they reside, or if they kind of have homes in two countries, kind of where they're spending most of their time, or where they're kind of more likely to want to draw down on those benefits. So the answer does tend to be where you work. But the first thing you look at is where social security contributions are due is who is your employer. And if you've got an employer, so say if it's yourself, Steph, sat in Ireland, but you've got a UK employer, the first answer is, okay, you've got a UK employer. UK social security contributions are due. And with social security rather than tax, because with tax, you can pay in two countries at once or even more than that. And it's very much driven by the time you're spending working in each location and your residence. But with social security, unless it's a very, very rare circumstance, you only ever pay in one country at once. So if you've got a legal employer outside of where you're residing, in the first instance anyway, you pay where you're employed. So it would be in the UK. But the way that the rules are written is that can flip back to the country where you're habitually resident. And fortunately, there's just really useful that there's no actual kind of definition of habitual residence for social security purposes, but it does essentially kind of mean where you live, where you spend most of your time, kind of where your main home is. And the rules state that if you work at least 25% of your time in the country where you're habitually resident, the social security contributions flip to that country. So if you are working, so even if in this scenario you had a UK employer, if you worked physically in Ireland at least 25% of your time, which isn't much, the contributions are due in Ireland, which makes sense because you're then paying into your home country system. But where the complexity arises, and this is where there's still people coming out of the woodwork now, is that with social security, you've obviously got your own individual contributions, but you have the employer contributions as well. And the actual collection mechanism, it's the employer that has the obligation to do that. So if you've got a UK only company that has a remote worker in Ireland and no presence in Ireland, the individual's not creating a permanent establishment, and we won't go into that for the purposes of this podcast.
Yeah.
But if you've got no infrastructure in Ireland, the UK employer still has to kind of make some sort of provision to pay across those contributions.
And I think, kind of fleshing that out from an employer's perspective, or, somebody who's approaching their employer to request this type of arrangement,
Hmm.
this often is an afterthought.
It really is, yeah.
In terms of costing this, generally the two questions that employers are thinking of when they're not actively sending somebody to work abroad is, what's this going to cost me and how hard is this? And it is potentially, it has a cost because now the Irish social insurance contribution rate for employers is, I think it's 11.15%. It's
Hmm.
going up to at the end, or in October of this year, I think it's around 11%. What is it in the UK from an employer's perspective?
So it's just gone up from 6th of April. It's just gone up to 15%. So it's
Okay, so there's saving.
yeah, it actually is. So in this scenario, it would be. But where a lot of UK businesses have really got burn is there's a lot of Brits that have kind of like a holiday home or a second home in Spain and or in France, and like the French rates can go up to, I think the employer contributions can go up to about 40%, and Spain
Really
about
high.
35. So even though the UK rates have just gone up to 15%, and there's been a lot of noise in the news that employers aren't happy about it and it's costing them a lot of money and it's kind of put recruitment plans on ice. But if that's going from 13.8% to 15%, if you've got an employee who's been working in Spain and suddenly the answer flips to Spain, and quite frequently these people tend to be kind of the more senior, the more well remunerated people, who might have accidentally triggered a social security liability in Spain, but been paying UK national insurance. And okay, great, you can get that national insurance back, but they then have to pay the delta of an additional 20% on quite a large salary in Spain, backdated, penalties and interest potentially as well. And
Hmm.
because it's factually driven, there's not a lot that employers can do about it. And
Yeah, it's easy to move, intra EU in terms of the rules are easy, but that doesn't mean that they're cheap to administer if you're moving to that each state has the right to levy social insurance. There's a flat rate.
yeah,
And the same would be for the employee. I mean, in Ireland, social insurance is 4%, 4.1%.
mm,
That's quite low, as a European level. So there can be advantages. The other thing, and perhaps this is an academic question, because I haven't seen it in practice, even though I do sometimes remind clients, what are the pitfalls of paying in the wrong place? Because I'm sure it happens.
happens quite a lot. I'm not sure there's kind of sort of pitfalls as such, other than you can create sort of contribution gaps in your record. Luckily for pension purposes, the UK opting back into the rules means that if you kind of do work and live across kind of the EU or EEA, you can sort of amalgamate your state pensions.
Mm.
Kind of the admin slightly, and I've not had to kind of drill down into this in too much detail myself, fortunately. But if you're working in another country and you're liable to contributions there, it doesn't create a gap in your record for state pension purposes. It means you can sort of, you do have to get state pension from different countries, but
It's like an aggregation.
exactly. But you can certainly have situations where, and actually kind of thinking back onto it, I did have one years ago with someone in Ireland, funnily enough, where she was pregnant and had the baby and tried to claim, I think, maternity pay in the UK, but hadn't been making contributions when she should have done and was making them in Ireland. And there was I think it got sorted out in the end, but yeah, went to claim statutory maternity pay and wasn't making class one contributions when she should have been and therefore wasn't entitled to it. I think I might be wrong about the fact, but it's sort of things like that that people don't consider when they're so used to it just being another tax that's collected from their pay without kind of thinking about what that is actually kind of paying for or what they might need at some point in the future. So it's more the unforeseen circumstances, I think.
Generally as well, the state pension is just such an amazing provision.
Mm,
And it's so important that people maximize their ability to access a full state pension, as full a state pension for whatever jurisdiction they can.
mhm.
And I think, to your point, ensuring that the record is correct. I had heard it said before in a past life when I used to work in Australia that technically, if social insurance contributions were being paid in the wrong jurisdiction, there was no reason why that Department of Social Protection would have to actually honour benefits relating to those. A little bit like, if you pay tax in the wrong country, well, it doesn't mean another country has to give you credit for it.
Yeah.
I haven't had practical experience of, a department taking that approach, but it plays to the point of get it right if you can, because
Yeah,
getting it right isn't that hard if you just ask the question.
yeah, exactly. I think it's like sort of going back to what you said earlier as well. I think people think about their tax position, but the social security is always such an afterthought, or people sort of naively think that they're one and the same thing. But obviously, it's not. And the social security, because it can be paying for your benefits, and if no one likes to think other than their state pension that they're going to need them, but people don't really know what the future holds. And especially with, I mean, the UK contributions, like depending on what you're paying, like you might not be entitled to something like job seekers allowance. So if people suddenly had to have been working abroad and made redundant or lose their job or have a family issue and suddenly have to come back into the UK, they can't claim job seekers unless they're paying a certain class of voluntary contributions while they're away. So it's,
Okay.
even though it's something that is probably way down the list of concerns or what people think about, they might not even think about it at all. It is still very important.
Yeah, I agree. I agree. Paperwork wise, is there anything you recommend employers kind of are aware of in terms of what paperwork they need to complete or who they should speak to if they need advice?
It's really, really important for employers to have some sort of internal process or policy that they're at least aware of where their employees are, which is very, very difficult. And there are some people that will just get on a plane and log on. And especially if, I mean, you can still join a video call and blur your background and be sat on the beach somewhere and your boss is none the wiser. But it's the employers need to have some element of control over it, because their employees can kind of do everything on their own terms, but it can be the employer that will be on the hook for, because if authorities in the country become aware that someone's there and should be paying contributions there, it's the employer that they will pursue for the underpayment.
Mm-hmm.
So, I mean, I've been working with a lot of employers, helping them put in kind of remote working policies and cross border working policies, just to kind of make sure that they've got some sort of framework that they know which employees are working abroad for how long, put in real kind of rigor around, okay, yes, we'll allow you to do it, but you can only do it for a certain number of days, or you have to attain an A1 certificate, so a certificate of coverage, which is an exemption certificate, just to display that you're only working in the country for a short period of time, you're contributing into like the UK system, therefore you're exempt. And if employers can kind of do that, then it's sort of damage limitation with kind of having any nasty surprises down the line. But it's very difficult to do. But it's having some sort of robust process, and also it being communicated clearly to their employees as well, of what the policy is, what they can and can't do, and having some sort of internal approval process of a line manager that's clued up enough, or someone in HR, or if it's a large enough organisation that has an in-house mobility team to kind of green light it.
Yeah. And I think for small businesses, sometimes just an awareness that you should ask your advisor, is this okay?
Mm.
Both before and, potentially during.
I think that's probably the most important thing. I think it's, even if you don't know what the answer is or whether you're sure, just ask. It's better to be safe than sorry.
It creates a good compliance record for the company. It looks,
Yeah,
this is not a choice. It's an obligation to get it right.
exactly. Yeah, although it's sort of a bit strange, because kind of it's, especially for, if you're looking at it from the UK authorities sort of purpose, then they're kind of looking at it basically being, well, we're not losing any revenue, because if it's UK employees, they're going to be on the UK payroll, paying pay as you earn and national insurance anyway.
Mhm.
Sort of an issue for if it gets uncovered in another jurisdiction. But it depends on the profile of the organisation. But a lot of businesses that I work with, especially the larger ones, it's not so much the kind of the actual sort of pure cost. A lot of businesses are really frightened about the sort of PR damage or reputational damage of, we're not being compliant in this country, especially if it's a fairly new jurisdiction that they're kind of entering the market in, or it's a business that, not going to name any names, they've already been in the press for kind of underpayments and things like that. So being kind of compliant is kind of very important for a lot of larger organizations, just from that perspective, rather than just a kind of pure cost perspective.
So then maybe to summarize, from an employee, a cross-border worker's perspective, maybe the message is, for your own sake, from a selfish perspective, you want your record to be right. You want to pay in the right jurisdiction. So perhaps engage with your employer. If you're asking for this or you're in the middle of this, ask the question, is this being done right?
Yeah, exactly. I think it's be upfront with your employer. If you're thinking about doing something like this and working cross-border or working remotely, do ask permission for it, because if you do something and suddenly your employer gets a letter from an overseas authority with a demand for payment, you're not going to be the most popular person. And it's always better to be upfront, do a bit of planning, because quite frequent, and I've been sort of pleasantly surprised as well, even though kind of there's been a lot in the news about a real push for return to work. A lot of employers are quite amenable to these requests, and yes, they'll likely put some limits around it and thresholds in terms of how many days you can do it for, or what kind of work you can do while you're in a location. But employers do realise the value of it, and they want their they want to be as flexible as possible for their staff. They realise that it's a benefit for themselves as an employer as well as to the employees. So a lot of them will make it work if they can. It won't just be a blanket no.
Thanks for listening to Tax Bites for Expats. Please do leave a rating or review wherever you listen to your podcast. And as always, remember to take professional tax advice specific to your personal circumstances before acting or refraining from action in connection with the matters dealt with in this series. The material in this podcast is intended to give general guidance only.